A lot of surprises for at least the investment community. Maybe not a surprise to you. Were you surprised by these numbers?
I was not. I mean, I happen to be in the same business, so no, I wasn't really surprised. I thought their crypto business would drop off pretty dramatically, and it did. So I don't think the numbers surprised us, and I don't think the numbers surprised the option marketplace either. The expected move was about a little under $4, and it moved just a little under $4.
So when you look at trying to predict, I mean, this is the hard part, especially given how volatile crypto has been. If you're an investor, especially if you're an institutional investor, actually trying to do some math, not treating this as a meme stock, how do you project out what this all looks like even 12 months from now?
Well, I think you can't. I think you have to look at the fact that Robinhood is in a very unique space. They have there's only a few brokerage firms in the U.S. that support kind of the decentralized market and really support crypto, and they're one of them. So I think that's a good thing, actually. They may have had, and obviously in hindsight, they did have too much reliance on their numbers in crypto. But I think that generally speaking, they're in the right direction with respect to the digital asset space.
When you think about the other cryptocurrencies that they may or may not bring online, and that seems to be another issue that investors are concerned about. At the moment, it looks like they're not going to bring some of these other, dare I say, wilder new coins on the platform. How much of a headwind does that represent to you?
I think that's a difficult situation. You know, the challenge that firms have is writing to different blockchains is not a simple task. And writing to those blockchains while maintaining, market maker liquidity across the board, because we're doing the exact same thing. And it is challenging. But I think if your job, and I believe this is Robinhood's job, as it is every other online broker, is to facilitate opportunity for the customer, then you have to offer as many coins or as many digital tokens as you possibly can.
Can you break down the distinction between, for example, what you guys are doing, what Robinhood is doing, what Coinbase is doing in terms of how these businesses are actually different, or increasingly are they starting to look alike?
Well, eventually they're all going to kind of, as the business matures, they're going to all look a little bit alike. I mean, Coinbase is obviously they're pretty much a one-trick pony. They're an amazing outlier, and they are a pretty incredible firm, but they are essentially a digital asset firm, and that's it. Robinhood and firms like Tasty are we support every product out there. We support stock, we support options, we support futures options, and crypto. I think over time, they are going to start to look a little bit more alike, and everybody's going to support all products. I think the challenge for platforms like Robinhood, and this is a real challenge for them, is they have very limited technology, and they have a little bit of limited know-how. And so I think the challenge for them is to somehow figure out how to ramp up their technology to be able to support all those products and all those strategies around those products. It is a challenge when you are an app only.
We talk often about the regulatory scrutiny on this company in particular, given its role in really actually bringing so many retailers and retail investors to the world of investing. How concerned should investors be about regulatory pushback either on payment for order flow? I don't know if you think that's still very much on the table. Gary Gensler's talked about it, or any of the other issues that have come up over the past month or several months now.
Well, I think the first thing, since we're on the topic of digital assets for a sec, I think that regulatory clarity in the decentralized space, regulatory clarity around digital assets and crypto is incredibly important, and it will ultimately be very bullish for that industry, because right now we're kind of in limbo and the products are limited because there is no regulatory clarity, especially here in the US. As far as payment for order flow goes, I consider that to be essentially a non-factor. I do not think that there's very much risk at all. I think it's the optics of payment for order flow are bad, but I don't think there's very much risk of payment for order flow going away. And I actually think, if anything, you're going to see the payment numbers go up. So if I looked at Robinhood, I think they're probably right now going to get more money on the payment side rather than less money. And so I expect that to be actually a little bit bullish for them. I think the piece that a lot of people are missing about Robinhood in the online brokerage space, though, is these firms are sitting on a lot of cash, and that cash is an incredible free call to the upside in case interest rates uptick. So I think that that's kind of the maybe the the ace they're holding in their hole card. And I think it's just, I think most people have just missed that.